Hey everyone, and welcome to our Explainer. Today, we are diving into that really cool space where faith meets finance. We're talking about halal investing. If you're a Muslim investor trying to make sense of the modern stock market, it can be a real headache. So we're going to look at some powerful new digital tools designed to help, and we'll compare three of the biggest players in the game right now. Okay, so let's just kick things off with a huge question, one that a lot of you have probably asked yourselves at some point. Are your investments truly halal? It seems like a simple question, right? But the answer can get surprisingly complicated, especially when you're looking at thousands of companies all over the world. And look, this isn't just some small niche issue we're talking about. For today's Muslim investors, this is a multi-billion-dollar question. Yeah, the days of manually digging through super dense financial reports just to figure this stuff out, those are pretty much over. Technology now gives us the answers in seconds. So let's get into it. Let's meet the digital screeners. We're going to break down three really powerful tools that solve this exact problem. But as you're about to see, each one has a totally different approach, and they're really tailored for different kinds of investors. Okay, first on the list, we've got Zoya. The best way to think of Zoya is as the intuitive stock checker. It's really built for the everyday retail investor, the person who's picking individual stocks and just needs a fast, super clear yes or no answer on whether a company is Shariah compliant. Then there's Musafa. I like to call this one the global researcher. This platform is for the investor who really loves getting into the weeds, someone who wants all the details, tons of global data, and, this is key, wants to see how a single stock measures up against a bunch of different international Sharia standards. And last but not least, we have Islamically. Now, this one has more of an institutional feel to it. Its whole focus is on stability and consistency, which makes it a fantastic choice for people who are thinking more about building a long-term portfolio with a conservative mindset. Okay, so this is where it all comes together. You can see the core differences right here side by side. Check out that primary standards row. Zoya is strict, Musafa is really broad, and Islamically kind of takes a hybrid approach. But the key differentiator line, that's what really tells the story. Zoya has a super practical purification calculator. Musafa gives you this comprehensive 5-star rating system. And Islamically, their use of a 36-month average for market cap, that's a classic institutional move to smooth out all the market volatility. And look how perfectly it lines up with who they're best for: the everyday stock picker, the deep dive researcher, and the conservative long-term investor. All right, so this leads to a question I know a lot of you have probably wondered about. Why do these apps sometimes disagree? You might pull up a stock and see it's halal on one app, but not on another. So let's solve this little mystery, because I'm telling you right now, it's usually not a mistake. And here's the key thing to remember. This difference in opinion, it's almost never a data error. It actually comes from their different methodologies. This is completely intentional. These platforms are built on different but equally valid scholarly interpretations of Islamic finance. And this is the big reveal. It often boils down to something as simple as how they calculate a company's debt ratio. So the AAOFI standard, which Zoya uses, measures debt against the company's market capitalization, which, can swing up and down like crazy. But a standard like FTSE, which Musafa uses, measures that same debt against a company's total assets, which is a much, much more stable number. It's kind of like having two referees watching the exact same play, but they're using different rule books to make the call. Same company, same data, but a different denominator gives you a completely different result. All right, so with all that in mind, how in the world do you choose one? Well, it really just boils down to finding your perfect fit. You've got to match the right tool to your own personal investment style. So just think for a second. Which one of these sounds the most like you? Are you the quick checker? You just need those fast, clear yes or no answers for stocks you're looking at. Or maybe you're the deep diver. You actually enjoy doing the research and comparing all the different global standards. Or are you the portfolio builder? Someone who's really focused on long-term stability and wants an institutional quality approach. So let's tie it all together nice and simple. For the retail investor, that quick checker type, Zoya's simplicity and its super handy purification tools are probably going to be ideal for you. For the global researcher, the deep diver, Musafa's multi-standard ratings and just massive global coverage are frankly unparalleled. And for the portfolio builder, the person with that institutional mindset, Islamically's laser focus on stability and their curated portfolios, that's going to be the best fit, hands down. But wait, we're not done yet, because these screening apps, they're really just the beginning of the story. The next frontier is already here, and it's artificial intelligence.
And this brings up a really fascinating, maybe even a little controversial question. Can a robot actually be a better Muslim investor than a human?
And this is a really serious question that scholars are grappling with. When you let an algorithm, a so-called black box, manage your money, does that introduce elements that are forbidden in Islam? We're talking specifically about excessive uncertainty, known as gharar, or pure speculation and gambling, which is called mizr.
So let's just make sure we're all on the same page here. Gharar is all about excessive uncertainty in a deal. A good way to think about it is like buying one of those online mystery boxes where you have no real idea what you're getting. And Macyr, well, that's basically gambling. It's getting wealthy by pure chance, like betting on a meme stock instead of through a company's hard work and productive effort.
Now, you'd probably think that AI would just pour gasoline on this fire, right? That it would make these problems way worse. Well, here's the twist. The analysis actually suggests that a well-governed AI, one that's designed from the ground up with Shariah principles in mind, can actually minimize these forbidden elements. It's a really powerful and kind of counterintuitive idea.
So, how on earth does it do that? Well, for starters, by getting rid of emotional, FOMO-driven trading, it directly fights against miser. An AI relies on data and proven strategies, not gut feelings. It can also be programmed to automatically block forbidden transactions, like short selling, which reduces gharar. And on top of all that, by providing built-in risk management, it can strip out some of the most dangerous parts of human error and our tendency to speculate.
All of which leaves us with one final huge question to noodle on. As our technology gets smarter and becomes more and more aligned with our deepest values, what does that mean for the future of our own human financial stewardship? It is a fascinating look at where faith, finance, and the future all connect. Thanks so much for joining us on this explainer.